Now I am going to discuss LKAS 16 changes in accounting estimates. Already we have discussed disposal adjustment, revaluation adjustment, exchange adjustment we have discussed, and this is also relevant for property, plant and equipment LK 16. Think about this one: useful lifetime change, depreciation method change, and residual value change. Those are the changes in accounting estimate relevant for property, plant and equipment. Therefore, you have to know how to adjust on the financial statement if it is given changes in accounting estimates. Lifetime change, depreciation method change, it means straight line based to reducing balance methods, or reducing balance method to straight line basis change method, and residual value change. Those are called changes in accounting estimate relevant for property plant equipment. There are two things you have to know. First one, when we are going to calculate annual depreciation, this is the equation you have to apply. Cost minus, normally depreciation equal cost minus residual value divided by useful lifetime. But if it is given changes in account estimates, in this situation depreciation can be calculated cost minus accumulated depreciation minus new residual value divided by remaining useful lifetime. Think about how to calculate depreciation if it has given changes in accounting estimates. And second one, if those are changed as a result of renovation or extension, lifetime change, depreciation method change, residual value change, those are changed as a result of extension or renovation. In this situation, cost incurred for extension and renovation should be considered as a part of cost value of assets. There are two things you have to know. Think how to calculate depreciation, and if it has given renovation cost or extension cost incurred for that, think how to record. Now see the example. It has given information relevant for property, plant and equipment, relevant for property, plant and equipment, and given as at 31st March 2019. Those are the previous year closing balance. 31st March 19, built-in cost value is given, and given carrying amounts. Carrying amount means net book value after deducting accumulated depreciation from cost value. Therefore, not given clearly accumulated depreciation, and residual value also given, lifetime is given. Think about normally depreciation can be calculated cost minus residual value divided by useful lifetime. But now think about it has given building is depreciated on straight line methods, and following transaction and event took place during the year end 31st March 20. This is our accounting period. Beginning of the year, 1st April 19, building were renovated incurring 4 million. As a result, the remaining useful lifetime of building increased to 18 years, and new residual value also is estimated 1 million. Think about residual value also change, and lifetime also change, estimate change. There are two things you have to know. Think about first one, cost incurred for renovation. Second one, thing how to calculate depreciation. Right? You have to prepare. First one, think about ledger account, building accounts, balance available, cost value should be included as a brought forward. Record values in thousand, debit side as a balance brought forward. And accumulated depreciation, not given clearly, but given cost and carrying amounts. Difference between cost value and carrying amount, those are the accumulated depreciation. Therefore, accumulated depreciation can be calculated up to beginning of the year. It has given cost value 66,000 minus carrying amounts. Difference between cost value and carrying amounts equal accumulated depreciation. Therefore, in this example, accumulated depreciation equal up to beginning of the year 24,000. That is, value should be included in the accumulated depreciation account as a balance brought forward. Therefore, accumulated depreciation account also as a balance brought forward 24,000. Up to beginning of the year, accumulated depreciation as a balance brought forward. Then think about cost incurred for renovation, 4 million. Beginning of the year, paid in cash. Therefore, cash account credit, bill in account debit. Cost incurred for renovation also should be considered as a part of cost value. Therefore, bill in account debit as a cash and cash account credit 4 million as a bill in name of other ledger accounts. Then second one, when we are going to calculate annual depreciation. Now think how to calculate annual depreciation. Normally cost minus residual value divided by useful lifetime. But now cannot be applied that equation. Estimate change, if it has given estimate change, this is the equation you have to apply to calculate annual depreciation. Cost minus accumulated depreciation minus new residual value divided by not useful lifetime divided by remaining useful lifetime. Therefore, cost value, as a cost value, now you have to consider renovation cost also, part of cost value. Therefore, annual depreciation equal, as a cost you have to consider renovation cost also. Therefore, 66,000 opening balance plus 4,000. Think about building account closing balance equals 70,000. That is value should be considered as a cost value. And accumulated depreciation up to beginning of the year, opening balance equal to 24,000. As well as given new residual value equal 1 million. Think about not 6 million now. As a result of renovation, useful lifetime change as well as new residual value also change. Then divided by remaining useful lifetime also given increase to 18 years. Sometime it has given remaining useful lifetime revised as 18 years. In this situation also 18 years. Increase to 18 years, revise as 18 years, also 18 years. That is a remaining lifetime. Think about useful lifetime equal to 20. But asset already used. Now it has given as a result of innovation, remaining lifetime increased to 18 years. Therefore, depreciation annual value equal 2,500. Therefore, this is value should be recorded as depreciation. Therefore, depreciation expense account debit 2,500 and accumulated depreciation account credit. Accumulated depreciation credit, name of other ledger account as building depreciation, and depreciation expense account debit as accumulated depreciation. Based on matching concepts, think how to record annual depreciation. Think about there are two things you have to know. First one, think about opening balances, carrying amount is given, think how to calculate accumulated depreciation. Then think about cost incurred for innovation, lifetime change. They ask relevant ledger accounts. Think what is the net impact. Cost incurred for innovation, think how to calculate annual depreciation, then think how to record in the ledger accounts. Therefore, build in assets, balance carry down. Normally debit side increase. Therefore, take total amount of debit side and difference value balance carry down. Therefore, build in account closing balance equal 70,000. As a balance carry down, and it should be include debit side as a brought forward, as a balance brought forward debit side, and build in depreciation expense that value should be included income statement. Therefore, this one should be closed. And accumulated depreciation balance carry down. Accumulated depreciation also asset accounts. Therefore, balance should be carried down. Take increase side, credit side increase 26,500. Take the debit side, then difference value balance carried down from debit side to credit side. Credit side as a balance brought forward and debit side as a balance carried down. And depreciation expense, therefore it should be not carried down, close. Close mean difference value as a income statement. Income statement. Assets, liability, and equity should be carried down. Income and expense should be close. Close mean difference value as a profit and loss. Not here carry down. Difference value as a profit and loss. If it has given company sum, cost incurred for renovation 4,000 should be included PP schedule as a purchase or addition. And annual depreciation should be included administration expense. And as well as PP schedule also should be included annual depreciation, and it is paid for cash also. Think how to calculate depreciation as well as think about cost incurred for renovation, how to records.